Hello, hello, everyone. Welcome or welcome back. For those who don't know me, my name is Alana O'Connell. I'm part of the marketing team here at Holistiplan. I'm so glad that you're joining us today for part 3 of this 4-part series, Cooking Up a Streamlined Year-End Tax Planning Process. Just a quick note before we get started, we are recording today's session and we will share the replay later this week. Feel free to drop your questions in that Q&A box at the bottom of your screen. We'll keep an eye on that throughout the session today and answer those as we go. Today's session is called The Secret Sauce, Seasonal Opportunities. Now, I used to work in restaurants, so I know that good cooking and a positive dining experience often comes down to timing. And I think the same can be said for financial planning. So today, Emily is going to show us how to identify and communicate seasonal opportunities that really upgrade your client's experience. With that, I'm thrilled to welcome back Emily Rassam, partner and senior financial planner at Archer Investment Management, where she serves over 200 households nationwide. With 18 years of experience, Emily helps clients make confident financial decisions that balance today's priorities with tomorrow's goals. She's been recognized as an Investopedia Top 100 Financial Advisor, a Forbes Top Women Advisor, and an Investment News 40 Under 40 Rising Star. Not to mention, she is a Holistiplan thought leader and speaker and helps advisors elevate their tax and estate planning conversations. So Emily, with that, let's get cooking.
Yeah, I'm excited to get into this today. So in this series here, we had the first session. So I've got in my slide deck, I've got it linked out. So in the resources tab, there's my slide deck, and in there's the YouTube video link for each of the prior sessions. So in the first one, we just talked about mise en place, getting all of our data and information together, kind of getting ready for getting into this tax planning season. In the second session, we cooked. So we kind of started to put all of that data into scenario analysis. Today, we're going to spend most of our time in scenario analysis, and I cooked up some sample case studies of clients that I want to take you into today. So we're going to spend most of our time there today. So I'm going to share my slide deck, a couple slides that I'm going to take you into Holistiplan for most of the time here. All right. You should be able to, Alana, see my screen. Okay, cooking up clarity. So Alana introduced me. Thank you so much. I think part of just the one thing I like to add is that I work with clients all day, every day. So that's something that I'm bringing into these sessions, are real live conversations. I was in scenario analysis this morning with a client. So digging into their projection through the end of the year and thinking ahead into next year. This is how I spend my time. So we have one more session left in this series. So part 4 will be kind of the finishing touches on tax planning season. So wanted to take you kind of into my kitchen or into my workspace here. How do I work with clients on a regular basis? What am I actually saying and doing? How am I using Holistiplan, especially this time of year for year-end planning purposes? And a big piece of that is scenario analysis. That's what I wanted to spend most of our time in for this 4-part series. But once I am done going in and doing a tax planning meeting with my clients, walking through the workflow steps that I shared in part 1, going into building their projection, talking to them about 2025, the current tax year, talking about looking forward into 2026, I like to memorialize that with a tax letter. So if you aren't using the tax letter program in Holistiplan, you are missing out. It's a fantastic. You're able to kind of pull together all of the notes and observations from this tax year and share that with the CPA or EA, or share it with the client who's self-preparing to remind them what happened. So how many times this week have you said to yourself, like, oh, that was this year? Like either a client meeting or something that happened in April or March or February, right? So I just said that this morning of like, I can't believe how distant kind of the first part of this year felt. So clients might not remember that they made a Roth contribution or Roth conversion, or that they had an income change or made an estimated tax payment. And so some of the different things that they do throughout the year that impacts their tax plan, it's nice to keep track of that in one tax letter that you can share with the client for their own purposes, or share directly to the CPA if you have that relationship. And it's the final step that I do as part of this season of getting things staged up and ready for next year. Because while I'm finishing and closing out a tax planning meeting with my clients, it's fresh in my mind. I know exactly what we just talked about. I know exactly what we just did. It's easy for me to go into the tax letter immediately, stage it up. And then what I typically do is then finalize that tax letter and send it out in February timeframe, March, usually with 1099s for any accounts that we manage. So I'm going to talk about that a lot more in part 4, but that's really how I kind of finish up this season and get myself prepared for the next year. And then the kind of final piece I'm going to share in that part 4 is, what do I do in my CRM system to get myself ready for next year too? So what tags am I adding? What tasks am I adding? What reminders am I adding so that I'm prepared for 2026 and I can remember, what did we do that prior year and what's important to this client and what did I promise that we would think about for that next year? So those are some things that we're going to talk about coming up. So session 1 recap, on my slide deck that you all have a copy of, I have just quick bullet points of that, really just kind of preparing for tax season, and the YouTube video that I have linked there. So we just talk about segmenting clients, having kind of clean data, data requests from clients. So give a lot of examples of how I kind of get my clients prepared to come into a tax planning meeting, get everything in place. In that second session, which is also out on YouTube, I've got a link for that in my slide deck as well. So we get into the scenario analysis tool and I share with you kind of how I get into that kind of projection of their taxes, how I utilize it, some inputs that I like to adjust with those different pieces, and then how do I communicate that in the client meeting live. So as I mentioned in prior sessions, I do this live with my clients to help build trust in the data that's living inside of the projection or the scenario. And also because, we know a lot about our clients, but there are things that happen and this helps to jog their memory. So as I'm going in and saying things like, hey, I've got your capital gains in here from the accounts we manage for you. When I asked you for the intake here, you said that you didn't have any capital gains, but let's just double check. Did you sell any crypto in a Coinbase account? Did you sell any RSUs this year that had gains on them? Did you do anything else that maybe you might have forgotten to put into the intake that I asked for in this meeting? So it allows us to really kind of work together with our clients. I think of us as planners, and some of you are CPAs on this call as well. I think of us as thought partners with our clients, and we're collaborating to kind of get these answers together. So ideally, we're not just getting data and talking at them for an hour. Usually what we're doing is kind of saying, hey, does this make sense? How do you feel about this information? What do you see here as well? So kind of getting their buy-in so that they trust the data that is creating the result you're looking for, and they're seeing what you're seeing. So I like to take clients in with me. That's my personal preference, but it's really worked out well to kind of build that relationship and trust with my clients. So today's goals here. So I'm going to talk to you a little bit about what do I try to get out of going into a scenario analysis with my clients. So what are the main goals I'm trying to solve for there? We're going to go into a live demo of scenario analysis and spend most of our time there together. I have some pretty cool scenarios I'll dig you into. And there's room for in the Q&A. If you want to see me model something, or if you have a question about an input, I've got some time available in this session today to maybe go into some of those questions that you have. So please feel free to shoot those across into the Q&A. Real life, client strategy. So I'm going to talk to you a little bit about how did the conversation go with the client when I presented this. So I'm showing you kind of anonymized. I've changed the data and the names a little bit, but I'm showing you some real client scenarios I've gone through with my clients in the last couple of weeks. So these aren't just aspirational type of ideas. These are real client scenarios with a couple tweaks. And so we're going to show how to model multiple scenarios depending on what those goals were, what you're trying to get out of scenario analysis. What do you want to see? What do you want to show your client? What do you want them to see? And then how to present those results or talk to clients about that. So I've had to have some tough conversations this year about, hey, we're going to have a pretty big tax bill. And so you have to ultimately sometimes be that person who's giving that bad news. So how do we ultimately do that? As a quick reminder, this is eligible for CFP CE. So make sure if you didn't get that credential in there, I think Holistiplan can still kind of tag you in at the end too. Okay, so what are some of our goals? So why do I go into scenario analysis? Why do I use this as a tool in this process? So I want to help my clients gain some clarity about their current year taxes and their projections. So what does this year look like? So my meeting this morning was a client who is in their first year of retirement. So last year, most of the year they were working and they had W-2 wages like they did their entire career. They had withholding coming out of payroll like they did their entire career. And this year is just new territory for them in a bunch of different ways. So this is something that they've needed some coaching on all of the facets of moving into retirement. They're kind of a little bit more anxious, but one piece of that is tax planning. So it's just reorienting them to the fact that, yes, one of them started Social Security and has a tax withholding against that. One of them has a pension and has tax withholding against that. We took a small distribution out of an IRA with a tax withholding, and then we plugged in interest, dividends, capital gains, and just kind of showed them that picture, because I shared with them how taxes are withheld from retirement income sources. So I fundamentally talked to them about that at the end of last year. We pre-planned what withholdings to take from different sources. But today was a little like, in the beginning of the meeting, like their shoulders were up near their ears. And then by the end of the meeting, you could see them just like totally drop that kind of moment, because they trust me. They've been my clients for, I think, 6 years now. I talked them through retirement. I got them there. I shared what to do to prepare for this year. But until they actually saw their numbers on a tax projection, on that scenario analysis, they still had this level of anxiety of not understanding or knowing what this year was going to look like. So that's something that creates that stress relief, that clarity, especially when clients have things in their tax plan that aren't normal. So I have a client who has, they were let go from their job. They had non-qualified stock options that they had 90 days to exercise. And they had pretty low strike price and a pretty high fair market value. And so the difference there, that spread, is taxed, right? So it's ordinary income taxation to them. So being able to show clarity, bring that relief, help make decisions. So there are all types of decisions that we like to make once we can see the data. And I tell clients this too, we might have some goals when we decide we're going to go in and do a scenario analysis. We might decide that we're going to go into here to maybe identify if it makes sense to maybe make a larger charitable contribution this year, maybe to a donor advised fund, or to do a Roth conversion. But sometimes just going in there, maybe you don't necessarily have something you're trying to do other than seek that clarity about withholdings and taxes owed. So some of the different strategies, the more common ones I run into in my practice, are Roth conversions. So if we kind of go back to Ed Slott's comments in kind of the April webinar about it's a crime to waste a low tax bracket. So if you know that you have a client that maybe has some room left in a 12% bracket, and you know that their income is rising, or they'll have larger income later that might push them up into 22% bracket, then it's saying, hey, how much room is left there? So if it's a crime to waste that room in that 12% bracket, how much room is left? And how do we want to fill it? And often a Roth conversion is one way to do that. Another one that I have modeled is a inherited IRA distribution. That's another way to bracket fill, right? So, and some of your clients might be business owners, have a little bit of control over when they have income, maybe depending on how they bill or receive income. So those are some things just to be able to look at. But then modeling charitable giving is another kind of more common one that I'm modeling for clients. So ones that are maybe trying to get some additional contributions in this year before we have some changes to charitable giving next year. Modeling life changes. So one of my clients during this season, they were looking at getting married. So they're planning on a big wedding event next year, second marriage for both of them. And they said, does it make sense for us to go down to a courthouse and kind of make this official before the end of the year? So I had that, and I had another one. I think I mentioned it in one of my prior sessions, where a woman who's in retirement, second marriage, they're engaged. What would make it? What changes would I see in my tax return if I decide to get married? So occasionally that type of change can be modeled. Also, just changes to dependents. Not that you're making a decision around dependents necessarily, but how does that impact your return? That's something you can model. If you kind of look forward into a few years for adding or subtracting dependents, or moving to a different state. So I have several clients. A lot of my clients are in Texas. That's where my business partner is located. And that's where our firm had original brick and mortar office. So we have Texas clients that say, I don't like summer here anymore. This isn't fun for me to kind of sit in this heat. And so I have clients that are wanting to maybe move up to the Pacific Northwest or Northeast. I've had clients who are in Texas, for example, and say, we want to move to Massachusetts or Connecticut or New Hampshire, New York, maybe. How does that look? How would my tax return look different? And so that's something that you can do, is ultimately build kind of your base case of staying in Texas, and then building additional cases or scenarios to say, if I turn on a state tax return for each of those states, how does that look for you with your scenario? So that's another piece of it. Capital gains planning is another one. So as you're maybe trading a portfolio, for a lot of my clients who are mid-career tech professionals, they got a lot of single stock exposure, right? So especially a lot of my clients work in tech. I have clients at NVIDIA and Apple, Microsoft. So these Meta, these different companies that have had this huge growth, right? So we've got these concentration issues of this stock, and they're likely still getting additional RSUs next year. They're accumulating more of it, and it keeps growing. And every headline in the last 2 weeks is talking about an AI bubble. So if we want to do some capital gains planning, how much more might that cost? So again, sure, capital gains tax brackets are pretty wide and flat, right? So it's easy to kind of do just a number in your head. But again, that can bring some additional comfort to your clients if you're able to then say, let's plug that in the context of your entire tax year. So you have a lot of moving parts, right? So we have different RSUs, which sometimes make their income a lot more lumpy. And you've had withholdings against those. And then now you're thinking about maybe selling a big chunk of stock that have low basis on it. That's something where we can then model out just to see, what does the tax year look like? And at the end of the day, what might your estimated tax payment look like for January 15th? What might you owe in April? What does that maybe look like, and help bring some peace around the entire scenario, and not just in a silo saying, oh, you're in the 15% or 20% with NIT, right? So that's kind of also, if you can move some deductions around, right? That deduction bunching or income bunching kind of scenario, some of those different ideas. So this is what I see the most just in my practice personally. You may have different scenarios, but again, you can play with it. And maybe if there's something different that you face a lot of that you would like to see, let me know. Another life change I actually didn't write on here that I should have mentioned. So I had a client who became a qualified widow this year. And so just mapping out what the next maybe 3 tax returns look like, just as her life is changing with filing status over the next few years, with new Social Security income that's coming in. She's a young daughter. So some of those different pieces, it's just nice to give that peace and clarity to our clients. So love this tool. I will tell you in every single session, this is my favorite tool in Holistiplan. So I'm excited to spend some time here with you today. Okay, so I'm going to stop this share, and I've got scenario analysis pulled up too. All right, who do we want to pick first? Oh, actually, real quick, I have 2 things I wanted to show you. So I do get this question in the Q&A regularly about when upcoming sessions are going to be. I don't know if y'all go into this calendar here, but you're able to go into, under the resources page, there's a webinars and videos page on Holistiplan's website. So this is where I go if I want to just see what other webinars are happening this month. I know you all probably get the emails, but if you get as many emails as I do, sometimes those get buried. So I do like to kind of come out here. And one thing that's a little bit newer, I was just asking Alana about this as we went into the practice session, what all of these SimuLive options are. And so a lot of the more popular webinars that have recently come out, they're doing a SimuLive where you can join at a specific time, where it's live, where there's a support and Q&A type of person. So if you want to watch it, you're already planning on watching a recording, doing it under the SimuLive will allow you to then maybe ask questions of people who are hanging in the chat along the way as well. So wanted to mention that to you. And then the final session that I mentioned, where we're going to go into that tax letter staging process, is going to be December 3rd at 2 p.m. Eastern. So this is an easy way. I think they also put that link in the chat for you to register that way as well. You'll also likely get an email, but wanted to mention that this calendar is out here as well. And this is also Queen Debbie's on here, Megan's on here too. The different webinars that are coming up are out here. Okay. And then one other thing I wanted to point out is that all of the videos live also on YouTube. And I've just noticed that they've started to put some really kind of short videos out here too. So these are like a minute, 2 minutes long. So deduction changes in 2026. So these are kind of like shorts, I think that they call them in the YouTube world, where you can go on and look at these short videos. So I just binged a bunch of these last night because I found them and wanted to share that with you too, if you didn't know that they exist and live out here as well. So there are also some playlists in here too. So if you wanted to go through, for example, some of the webinars that I've done over time, just to learn a little bit more about how I use Holistiplan, or if you're doing a deeper dive in P&C insurance, for example, and you want to see what Megan Dowd's talked about, she's fantastic, by the way. And I don't know how she keeps coming up with all this really cool, fresh content, but her webinars are great too. And of course, Queen Debbie and everything that Roger Pine and other people put together here as well. So there's a load of data in here that will help you skill up in this space if that's something that you are ultimately seeking. All right, without further ado, let's jump into some scenarios here. So in the first session, I shared with you ultimately, once you upload a tax return for a client, and that's in here, you will automatically have some scenario analysis built in here as well. It looks like we actually have some Q&A here too. So are we able to show married filing jointly versus married filing single in Holistiplan? And is there a way to merge it into one projection? So yes, you can. I'm going to actually show you, you know what? I'm going to take you into that one first. So since that's the first question, I'm just going to kind of go where you go. And then are these on Holistiplan website? Yes, I think your question is ultimately, is the webinar recording and the video and the registration link on the Holistiplan website? Yes, they are. So if you just go under that resources tab, you can get in there as well. My son edits and posts videos for other firms. Ah, okay. So somebody wants to make a connection there. Cool. That's a cool skill set to have. All right. So I'm going to go into this scenario here. So this was somebody who was looking to maybe join up and get married officially, but there's also some other considerations with this particular client that we had. So I uploaded returns for last year for each of them. So even though I know that the combined return is going to look so much different, it always helps me to be able to see what all of the prior data and information looked like. So I'm not missing anything. So when I'm taking a look through their prior returns, so each person separately, so we know that they were filing single for last year. They're looking to file married this year. I'll take you in a minute into married filing separately versus married filing jointly. Take that in just a minute here. But what this allows me to see is some of the different pieces that went into their individual returns, because this is one of my questions going into this meeting is, what was this other wage income on the 2024 return? Is there more detail around that? Is that going to continue? So it helps me to kind of map over kind of your prior year case. And then I like to create a base case and then add kind of an additional scenario. So you could just create one married filing jointly case and then play with that one. So if you're going to show an options exercise or a Roth conversion or charitable giving, or just play with the filing status, you can do it that way. Or you might say, this is married filing jointly, and I'm going to add a scenario where we're doing married filing separately and checking that box if they're married filing separately and living together, if that's that case. So for the person who asked that, I apologize, I don't remember the name of who asked me that just now, but you might want to say, I'm going to copy this scenario, or I'm going to copy this one, right? So if we decide to move forward with whatever strategy I'm proposing, I want to see this another way. So you can copy from a scenario here and say, which one am I going to copy? So I might want to copy the base case scenario, hit OK. So then it's going to create another scenario here. So if I'm comparing it against this one, I might want to reorder this a little bit. So I'm going to reorder the columns. So I'm going to show you where I just clicked that in case you didn't see. There's a reorder columns kind of at the top here. And then I'm going to say, hey, if this base case here, I kind of want next to it, I might just drag this guy over and make this column 4. Okay, so just moved it. And then in order for me to rename it, I can go here and say married filing separately, base case 2025. Okay, whatever you want to name it. There's also a really cool feature here, kind of once you kind of move your mouse over between the cases, you see this little delta guy right here. So you can then see what are the changes or differences. So especially if you're modeling a few things and you want to see, you know, right now they're all the same, so there's nothing coming into this column. But if you start to make adjustments, so maybe in one of the cases you have higher or lower capital gains, if that's what you're solving for, higher or lower income, higher or lower deductions, IRA contributions, it'll just allow you to quickly identify what's different in the different cases here. So just wanted to point that out too. And you can move this over here. So you have a previous and next that can, you have more than 4 scenarios. 4 scenarios fit on at least my screen well. I don't know if you guys have those like super big long monitors. I don't know, maybe it'll show more, but I see 4 on my screen. And so if I have multiple additional scenarios here that I'm modeling, then I just need to hit previous or next to kind of slide over to the next one. So if I'm doing married filing single base case, married filing jointly, then I'm looking here, and this is where I want to change, single, married filing separately here. And if they're living together, I'm checking that box here, okay? So if that's the only difference, then you can ultimately then compare how that all looks. So I did copy, oh, did I copy the wrong one? Hang on here. I'm going to delete this scenario because it didn't bring over the income the way I wanted it to. All right, add a scenario. I want to copy married filing jointly base case here. Okay, reorder again. Bring this up. Okay, married filing separately. Okay, then you can go in and make your adjustments. So going in, still didn't pull that in. I'll have to go in there and kind of tune it up because I have additional notes in here as well. So when I go into, get rid of this guy. When I go into these scenarios here, again, what I'm doing in these meetings is I'm just walking through it with the client first. So how does this scenario look? Does all of this data make sense? So when I go and click in these worksheets, there are all these different areas where you can click on and add additional information or break it out differently. So I've already gathered from them some information related to earnings. So this person had a couple of different wage sources. So we've got those added in. So you can add in maybe a job name, like they worked for Apple and then they switched and worked for AMD, for example. You can just change and add those amounts in there. So when you're confirming and checking with the client, and they're asking, okay, where did my 199,500 come from? Then you can go in and say, okay, this came from these 2 wage sources that you reported to me. Does that feel accurate to you? You can go in and kind of add those additional notes. And then I also use it, especially this time of year. So November 12th, as of today's recording, we're not done with the year yet. So I go in here as well. So for RSUs, for example, I might go and look at, hey, you've already received a certain amount of RSUs year to date, and you have an expected amount, which is going to change. So a lot of the companies I work with have a vesting coming up in a few days on November 15th, or maybe in December, based on when their grant dates came in, based on how frequently they vest. And so I do like to put that in there and say, okay, this is actual, right? Because those vestings occurred. And we know what the stock price was on those dates that those RSUs vested. We know they're already likely on your paycheck and they show up. We know what the withholding was off of those RSUs. And so then I also like to say, here's what we expect to come in before year end. And there's a value difference. So, right, could be higher or lower based on the share cost at the time of the RSU vest. So the value of the company at that point. So you can add multiple calculation rows and notes. So that way, when you're going in and talking through this with your client, this little triangle gives it away that there's some additional notes in here as well. You can go in there. You're also putting in your withholding. So here, this is another area where I've identified, yep, there's some changes here where I have taxes withheld year to date and taxes that they expect to withhold through the end of the year. So maybe they're withholding additional amounts on an RSU vest if they have the ability to elect more, or they're bumping up their payroll withholdings through the end of the year. Or if I just want to kind of mark where we are in the year and say, hey, you have a number of your paychecks in, and maybe we have 3 or 4 left. And so here's the withholding estimate for the remainder of the year. So where are we year to date off of the pay stub? Where are we going to be by the end of the year? And just getting that agreement and buy-in from the client that this is the data I have for you. Does that all make sense? So when we go ahead and plug in the prior year tax returns, I'm looking at what their interest and dividends were in prior year, and then just mapping over if they haven't had any major changes to savings balances or investment balances or investment types. So if they didn't switch from a full like growth-based portfolio to income-based portfolio, if things look fairly similar, I'm typically just going to map over and kind of round up the numbers from the prior years. So I've just kind of combined that here in this case. The other thing that I gather is their capital gains information. So for most of my clients, we are managing assets. So I'm looking at our system and saying, okay, here's where we are year to date with capital gains so far. And I'm checking with the client to say, I've gathered the information out of the system we trade in. Can you tell me any more about any sales that you've made and maybe personal accounts that you manage yourself? Or in this case, they have RSUs. Have you sold any RSUs in your stock plan website? And can you share that capital gain information? So it's just a quick check just to make sure that I have everything captured here. And then just to ask questions like, Adam, what the heck happened last year? So tell me more. How did this go? How did you make that decision? Did you withhold enough taxes? You know, this is a new client for me. So that was where my brain went when I saw this scenario kind of originally here. So somebody asked me, how did you get both Christy and Adam's individual returns under the same scenario analysis? So if somebody from Holistiplan is in the chat and has a better way, let me know. I'll tell you how I did it. So I built this scenario with one client in there. So Christy, ultimately, I put her in here, put her tax return in here, and then I built a separate scenario for Adam for 2024 and just copied it over for that single one. So I don't know that there's any way to kind of merge those naturally, but it just took me a minute. I built it in Holistiplan and just had it on another screen. And I just said, okay, now I need to add an Adam scenario, and I'm going to just plug in the data that kind of got extracted out of his return. So just took an extra second. If there's a way to magically do it that I missed, anyone's welcome to kind of type an answer in here from Holistiplan that might know differently than I do. Okay. So that was the same kind of question Janet had, is how do they combine the single returns into the married filing jointly? So Holistiplan did not create the married filing jointly. They pulled in and extracted the data off the single return. They pulled in and extracted the data off the single return. And then I created a scenario here of their joint return projection for this year. So this is something that that information from prior years will help guide me to make sure that I'm not missing anything. And also just to copy forward very quickly some data like things that don't change or will be similar. So I'll typically know what their dependent situation looked like or filing status, interest, dividends, cap gains, everything from prior years. And if I don't know, so not every client does their prep work, right? So have any of you ever gone into a meeting where the client hasn't shared the data that you need? I will start with, hey, I'm going to copy over your prior year, and then we're going to talk about what might be different. So I might not have year-to-date pay stubs, but I might be able to say, if you haven't changed jobs, I might assume you earn maybe a little bit more than you did the prior year. And I'm going to assume maybe your withholdings were about the same. Can you confirm? So sometimes in these meetings, it's a way for me to just say, let me copy over and copy the case from the prior year, copy 2024 into 2025. Run it into the 2025 brackets and changes to the tax law this year, and then just talk through each of these different scenarios. This is why I like to do this live here as well. Okay, looks like a lot of the other questions are similar about how we got to here. I think I answered that too. Okay, another question came up is, do you send clients a copy of the scenario analysis? If so, how do you remove the notes? So I do PDF this and then save it in their client vault. That way I also know that if I go in and tinker later, I have this saved for myself to say, what did I present in that meeting? And so if I went in and changed anything after the fact, I've kind of memorialized what was talked about in the meeting, and then the client can look at it as well. So some of my clients like to analyze the data or have that available to them. So it's ultimately saving that there too. How do you calculate projected earnings and withholdings through the end of the year? So Jason, I'm typically looking at their year-to-date pay stub. So just like if you pull up any W-2 wage pay stub, you're able to see, okay, this is where they are in the year. So if they're biweekly pay or semi-monthly pay, let's say they're semi-monthly pay. So they typically get paid maybe on the 15th of the month, the 31st or 30th of the month. So as of November 12th, they'll have 4 paychecks left, right? So I can plug in their year-to-date wages, their year-to-date withholdings, and then if it's a standard paycheck where they're paid the same amount, salaried, or have a similar amount that they're being paid, I can then basically multiply kind of a gross wages from that one paycheck 4 more times, their withholdings from that paycheck 4 more times, and I can just kind of come up with an estimate for if no changes are made, no bonuses are expected, no changes to withholdings are made, then here's where we maybe are going to be by the end of the year for income. So I just kind of manually do that and get that plugged in here. So I'm going to give them credit for additional withholdings that they're going to have through the end of the year, and not just plug in their total salary for the year and then just withholdings year to date. I want to be true to what will likely happen if they continue on with their current withholdings out of payroll currently. So when we go into this case here too, so some of the different pieces that I'm going to look at. So total tax. So what is the total tax owed? And then we're able to look at the bracket. So in their case, they're really in the 37% bracket either way. So this couple is not just looking at what happens with our tax return if we get married, but they also, one of them wanted to exercise some options as well. So we looked at that too. I'll share a little bit more about that in a moment. So taking a look at their effective rate, being able to calculate what that looks like. And then as we get towards the bottom here, really kind of the meat of it is, what is the total tax for the year? So based on all of the wage information that I've plugged in, any other sources of income that they have, any dividends, interest, capital gains in their case, and then also the taxation on the spread of their stock option exercise. Those are all their income sources for the year. I'm also looking at their total withholding for the year as well. So I'm taking a look at, it's going to pull down any withholdings I've plugged in previously. So there are multiple screens in this system where you can plug in the withholdings against those wages, right? So when I'm going in and plugging in Social Security income, for example, so up near the top, there's a Social Security benefits worksheet here. So if they were of age and taking Social Security, I can go ahead and plug in their Social Security wages here. And then I can also plug in their withholding, their Social Security benefit here, and then their withholding. So let's say they just withheld $5,000 off of it, right? So that, once I plug in a withholding amount here or in any of the other wage worksheets, it'll all carry down and summarize at the bottom. So let me get rid of this guy. So for them, I had their withholdings against payroll. So payroll withholdings are plugged in here. And so those will carry down. Anywhere that you're going to do withholding or enter them into a worksheet, anywhere along the top is all going to come down to this one summary down here. So I can take a look at what are their total withholdings, including their projected withholdings through the end of the year. So where do they stand right now? So this was not the most fun conversation to say, yep, you've already withheld and paid $168,000 in taxes, but your total tax for the year is about $305,000 in this projection based on the data that's in here. So this allows us to kind of see what that difference is, and then scroll down to the bottom. That difference is all the way at the bottom, and it tells you what that remaining tax liability might be if the data in this system is accurate. So it allows us to see what that looks like, and then you can plug in, for example, estimated tax payment. So if that's something that they wanted to do, so make a $100,000 estimated tax payment, this is an opportunity to kind of plug that in as well, and then just see what that remaining difference might look like. And also there's a quick calculation of safe harbor up here as well. So that actually didn't quite get them to safe harbor. So maybe it's saying a little bit more might push them into that position of being having paid 90% of total tax, or if you want to pay the 110% of prior year tax liability. Those are things that you can ultimately look at here and help maybe dial this up or down a little bit. So, maybe 110, 105. So then you can say, okay, if things continue on, so if you don't make any adjustments to payroll withholding through the end of the year, if you just send in an estimated tax payment, you will have prepaid, $278,000 against a total tax liability for the year of $305,000. So that might put you in a position of owing, a little bit more or less than $27,000. So I tend to try to talk in ranges with clients because these are estimates, and there's pieces that come into the projection. We don't know additional capital gains distributions that might happen in mutual funds. We don't know for this particular client, they have another RSU vest. That stock might, the value of that stock might change. So especially if you're not doing this on November 12th, if you're doing this much earlier in the year, there can be a lot more uncertainty about what that income might be, or if there's a year-end bonus coming. So this gives you the ability to maybe just talk about directionally where they might be, and are they somewhere close to withholding enough and prepaying enough throughout the year, and how does that look? So in this particular case, the one additional thing I wanted to show you was there is here your ability to break out different types of income. So for here, this person had a non-qualified stock option exercise that they're considering because they've left employment, changed jobs, and they're within a 90-day post-termination extension period. So they're able to go in here and maybe do some of that. So what I like to do, just as a quick little tip, is to put some additional notes in here as well. So to put in here potentially maybe what the strike price is, fair market value, and how many shares, so that if you wanted to adjust it, you just have your notes ready to go. So use these notes, use these calculation rows. I love to kind of split things out a little bit differently here too. So if there was wages from a couple of different sources, so if they've had employment in a couple of different places in a year, or they have different types of employment income, you can spread that out even a little bit differently too. So you can put in a bonus differently. If they have overtime or tip income, you can split that out as well, so that if you wanted to play with that number changing a little bit or create some variability there, then you're not just staring at a number in the meeting saying, where did this $710,000 come from? You can go in there and either open up some different calculation fields or split that income out a little bit differently too. So that's something that I like to do when I'm in here, is maybe divide that out in this scenario. So taking a look at the options exercise. So this one was non-qualified, so those went in there. But there is one additional page I wanted to show you about AMT calculation for ISOs. So if they had maybe incentive stock options as well as non-qualifieds, or maybe just ISOs, you do have a solve for max button here. So before you start to hit AMT, there is a solve for max button. So I don't know that everybody knows that exists, but wanted to point that out if you also deal with more clients that maybe have stock options that they're considering exercising, and where I plug those in. So non-qualifieds I'm plugging in typically under wages, and then ISOs here, this is a case where I'm looking at maybe a calculation here that might be useful to understand where they fall into AMT. And then if they are going to have AMT like he did in the prior year, it'll have that calculation plugged in as well. Okay, whoa, 14 questions. Let me see what's up here. Okay, let's see. Can you give us some best practices on handling calculation overrides? So calculation overrides, so when you're talking about, Jeff, going into, like, you've entered information into a box and now you're trying to kind of clear that out. So I often, honestly, I kind of start over. So if I put in a calculation override, so let's say I'm going to go in and do a Roth conversion of 30,000, and then I realize that I want to split that out differently, right? Because if you don't have a Roth conversion separate for each person in the scenario, then you disable this additional Roth explainer button that comes out. If this is of interest to you, the Roth explainer piece, there are separate kind of videos and tutorials on that whole piece, or just play with it a little bit too. It just gives some calculations and ideas around Roth conversions. So it allows you to kind of go into a different piece that's client facing that talks about Roth conversions. But once you get into entering information into this override, typically kind of getting out of that and getting into, you just kind of start over and delete everything out and then get into who you want to actually do that Roth for. And then if you really get stuck where you got information into a field where now it's telling you it's overriding the data, you can also kind of delete the base case and kind of start over again. So copy it over and start over again. Again, if there's someone from Holistiplan that says, hey, there's a way easier button, Emily, to do that. I'll admit to you, I use this regularly and sometimes my workarounds maybe aren't the best way. So I'm always curious to hear if there's a better way to do that as well. Okay, what section do you go to input the RSU information? So for the person who asked that question, this was just under the wages worksheet. So right on the 1040 income, this splits it out a little bit differently here too. So if you go ahead and click on this pencil, you can go ahead and open up those additional wage opportunities here. So if you wanted to split out the RSUs, for example, so in this case, in one of the scenarios here, she had 710 in income, but I wanted to see the breakout between RSU income and gross wages. So that's something that I like to just pull out if there's something that might be a little bit different or unique, so that we can then again play with that information that's in there and kind of see how that all looks. Okay, I'm going to hop into a couple other scenarios here. So this is another scenario that I ran for a client who said basically in 2024, they had a moment that they felt was a sting where they had a $32,000 tax bill. It was a little bit of a surprise to them. This was somebody who came out of medical school and had actually a couple of different jobs and they just didn't withhold enough. That's actually part of the reason why they came to work with us is they said, hey, having a surprise $32,000 tax bill was not a fun experience for us. We kind of feel like we need a little bit more support and help. So we increased their withholdings against payroll, assuming maybe some similar wages. And guess what? They made a lot more money in the next year. So this year their wages are higher. They did withhold more off of payroll. So we were able to say, hey, this is the difference in your income. So you can hit this little delta button, right? So this is one of the ways that you can see, hey, you guys had another $127,000 of income this year. So that's a change for you for this year. Everything else I just copied over. It's kind of a faster way to do that. Sometimes we did have some changes or updates to their capital gain situation based on the trading that we're doing for them and some outside trades. So somewhat similar, but a little bit different year for them from a capital gains or Schedule D income perspective. And then there's, of course, some other changes. So they had some additional income and additional deduction, just doing standard deduction year over year. So when we go down into total tax, so their total tax for the year did increase, and we can see by how much. So they earned more. Their taxes are higher this year in 2025. So even though they withheld more, so this is the part that was painful for them, is in the prior year, they withheld $35,000 in taxes and owed $32,000. So they withheld more. They said, great, going into 2025, we didn't like that surprise. We need to withhold more out of our payroll in order to cover that tax liability. So they went back and changed their payroll. They withheld $61,000. Well, they made a lot of money this year, right? So they didn't withhold enough. So now we still have a tax bill. The difference is they knew this answer in October of 2025 instead of finding out as a nice surprise in April. So now it gives us the opportunity to then decide and have a conversation together with them on, do you want to increase payroll withholdings further? Are you fine with the fact that you are meeting safe harbor, definition of 110% of prior year tax withholding or taxes owed? So, or do you want to send in an estimated tax payment? So they ended up sending in an estimated tax payment because they had additional cash. They had a cash inflow that came in that felt more comfortable to them versus reducing payroll and having to change it again in January. But we were able to go in and make that adjustment. So as we did and had that conversation, that was really the main goal going into this particular scenario with this client. But they also wanted to think about and model donor advised fund. And they also asked me about Roth conversions. So we played with the scenario a little bit further too in this meeting. So we went in here. So they are more charitably inclined. They also have appreciated investments that they have received. And so one of the areas that we went into in building this alternative scenario is we've got a base case here of where do you stand right now if you do nothing changes before year end. where do you stand from a tax liability perspective? And then in scenario 3, it's what if we do a couple of different techniques here? In their case, they happen to want to look at 2. And so in the actual meeting, we played around with it a little bit. So we went in here to charity worksheet here. So you can go in here and put what type of contribution that you are making. There's also an additional explainer. There's some quick videos on that as well. If you want to go into maybe an additional piece for a client who maybe is not familiar with what a donor advised fund is, or maybe want a good visual alongside that as well, that's something you can take your client into. So we played with the donor advised fund calculation contribution and put that in here. So that then allowed us to have an itemized deduction scenario for them. And so we went, when we did that, I'll show you where we were. So in the meeting, I showed the donor advised fund contribution first and basically said, if all we want to do is reduce that tax liability, satisfy your desire to make a charitable contribution, and then really just see what that difference is, we can then look at that scenario difference. So base year, where do you stand now? What does your remaining tax liability look like for you? Second case is we added donor advised fund contribution. How do you look now? Well, if they've already kind of gotten to a place of saying, okay, I'm willing to accept the fact that we might have a $34,000 tax bill and maybe willing to dial that back up again, we then looked at, well, you're still in the 24% bracket. And again, remember, one of them's a newer doctor saying your income is going to continue to rise. It's predicted to continue to rise, and they're going to become a partner and have some other revenue. And so there's some things that are going to change that are going to increase their income over time. So this is still that concept of don't waste a low tax bracket. They are likely going to be somewhere in the 30s for, kind of their top tax bracket for future years. So, yes, we want to satisfy, we want to know where we're at. We want to make a charitable contribution. And well, what if we then still fill up that tax bracket? So we went back in here and played with an idea of doing a Roth conversion. So the result from this meeting, we played around with donor advised fund contribution amounts. We played around with a Roth conversion amount for that client as well. And we then kind of shared where they ended up. So not that much of a difference, right, in what they might have owed, but then being able to say we made a charitable contribution and got some money converted over to Roth in a lower tax bracket year for us, that ended up being a win. And then they did end up sending in an estimated tax payment because to them, it just felt like, hey, we just want to take care of this liability. We prefer to kind of prepay a portion of this tax liability now before January 15th estimated tax deadline. Okay, I'm going to take you into one more here. So we're going to go into this retiree case. So this is a real client scenario of doing a Roth conversion. So there's a couple things that went on with this client. So we had scenario 1 is their 2024 return, which was imported in. So we pulled in all of their 2024 return data. So they retired. So they retired towards the end of 2024. So they did have some W-2 income during that year, but it still makes sense to import the return, even if you feel like things are different. So even in the case where we had 2 single people going to married filing jointly, I like to just see, am I missing anything? Or what might be different kind of going into the next year beyond just the wage income changes. So I created scenario 4 just by uploading their return from 2024, was able to see what that looked like. And then I have a retirement base case. So just based on their living on savings and taxable account distributions, their interest is similar. I just kind of bumped it up a little bit because we put a little bit more in a money market this year. So looking at the base case, it's really, where are you from capital gains perspective? Their income is a lot lower. So there's room here, right? They're in that happy valley of, hey, I just retired. I don't have required minimum distributions yet. I'm not starting Social Security necessarily. So what are some different things that we can do in this year, right? Don't want to waste this low tax bracket. They'd go down to the 10% bracket. So there's some different ideas here. So it depends on what you're trying to solve for. You might try to solve for gain harvesting, right? So selling some investments up to, before you hit that 15% capital gains bracket, you might be solving for, hey, to me, a low tax bracket for this client might be filling up the 12% bracket. So maybe that's something we want to solve for. Or, if they're kind of getting closer to or at Medicare age, maybe I want to solve for, how do I create enough income to stay below kind of that first IRMA bracket for Medicare premiums, and how do I maybe solve for that? So went into this scenario, went into this client meeting saying, okay, maybe we want to fill up the 12 or maybe stay below IRMA. We want to do some Roth conversions in their base case. So they had owed some taxes in the prior year. They sent in some estimated tax payments in the front part of the year, not realizing that they really didn't have any income this year. So they really didn't necessarily need to do that. If nothing changed with no conversions or nothing else happening in the year, they were actually going to get most of that back for this year. They really didn't have much income. So then looking at how do I max that 12% bracket? So went in here and put in a Roth conversion. Where you can find the number for that, there's a range calc that allows you to kind of go into a scenario and see how much room is left inside of your current tax bracket. So you can see where kind of that next jump is going to be on a tax bracket, just kind of in a quick range calc scenario. So if that's something you want solved for you, if that's not kind of front of mind for you where those brackets lie, you can just jump into a really quick range calc to find that out. So for them, a $66,000 conversion would have maxed out the 12% bracket. So we showed that scenario here for them as one of the options, and they still had a little bit of a refund based on the estimated tax payment that they had made. We also looked at a no IRMA scenario. So looking at for them doing a $165,000 Roth conversion, taking a look at that scenario here, and then where they ended up. So this is owing a little bit more. So we actually ended up with kind of a Goldilocks middle scenario of, well, I don't want to necessarily get a refund. Maybe we can convert more, but maybe I don't want to pay a $17,000 tax bill this year. So the final result of this meeting, we did a middle amount. We did a Roth conversion of $80,000 and picked that middle amount to really just kind of consume that refund that they were going to be getting. So we just basically said, how do we create more of a flat tax year? Take advantage of the fact you've already paid some taxes, do a Roth conversion to kind of cover that middle amount, and then just kind of have a nice flat year. That felt right to them. So those are just some different things that you can go ahead and model in here, and so much more. So if you're just kind of evaluating life changes, income changes, deduction changes, plugging in a Roth conversion, or just seeing where you are in a bracket, charitable contributions, those are the big things I'm modeling typically in these scenarios here. And it's just an incredibly powerful tool. So if you don't be afraid to do this with your client, even if this is new for you. So when I first started working in scenario analysis, I took some clients that I loved and trusted and said, hey, this is a newer tool. Let's go in this together. And what's your impression of this? And what do you feel about this? And I'm plugging this data in here. Does that make sense to you too? So just plugging in some different ideas and scenarios allows you to kind of see around the corners, see what next year looks like, predict what this year might look like, and also model out some changes. And even if you've already explained what it might be, or your CPA is even given maybe an estimate for what the taxes might be, it's just there's comfort in seeing that data that might be useful for you as well. Okay. Alana, I feel like there's a lot of questions we didn't hit. Here's a follow-up email that we'll do. So what I'll do is I'm going to take a look at all of these questions, and they will at Holistiplan as well. So some of these might be more technical about scenario analysis that they'll chime in on. Others are about how I use it personally. So we'll get in the follow-up resources email, the slide deck, the recording, and looks like we've got a bank of questions to answer too.
Yeah, we will get you answers there. Quite a few unanswered questions here. We will get to them in our follow-up email, like Emily said. Also, if you are a Holistiplan user and you have questions about specific tools that Emily talked about today, or a specific scenario that you're trying to model out, and you're having trouble, you can always reach out to our support team at help@holistiplan.com. They are pros. We have a number of CFPs and EAs on our team. When I say they know everything, I'm not kidding. They know everything. So please don't hesitate to reach out to them.
Yeah, thanks everybody.
Yeah, thanks so much, Emily. Don't forget to register for the final session in this series. Again, that link is in the chat and in the resources tab, and we will send it in the follow-up email. So we look forward to seeing you guys in December.
Bye.
Bye, everyone.